In this video, traders, I want to talk about the 3 phases of an impulse move. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so in this brief video, I'm going to run through the three phases of an impulse move. Today, we had our news came out of the positive news from a vaccine. Basically, the time I'm filming this, in the midst of the coronavirus pandemic in November, some good news for the market came out in regard to a vaccine. The market starts to spike up. You get a lot of risk-on type movements and causing some of the currencies to move as well. So I want to look at and kind of drill down at some of the standard patterns that these things always seem to do, whether it's positive news and causing markets to go higher or negative news and causing the markets to go lower. Of course, if you're trading a currency pair, it's going to depend on which side of the pair your risk on, risk off currency is. But regardless of that, what we're looking for is 3 phases, and we nearly almost always get these 3 phases. They look a little bit different. I've got a couple of examples for you today so we can see the difference. But if you go back and look at any kind of news that comes out as a surprise, so it could be surprise data that's very surprising, so non-farm payrolls is exceptionally different, interest rate announcement, something that's cut or increased, or something that's unexpected, like this virus vaccine news was unexpected to the market. And so we have what's called a reprice scenario. And a reprice scenario basically is where everybody suddenly agrees that, hey, this is probably changing the price of the asset that we're looking at significantly. And so we get this impulsive move, and often we get continuation and follow through. Now, let's not confuse that with later trade that could be a full reversal. I've seen many times, dozens of times, guys, where we've seen huge moves only to be reversed later on, but that's a separate trade. It's a separate trade idea. What I want to talk about is the impulse and the 3 phases. So we normally get 3 phases. The first phase is the drive and the flag. So very often we'll get the first kind of retrace, if you like, tends to be either a nice high tight flag in the case of this GBP JPY, good drive higher, significant number of pips in relative to what's been going on drive, and a flag. This is a 1-minute chart, by the way, just so you can see the granularity of each of the individual moves, sitting there for 5 minutes, followed by a further move. So this I call kind of phase 1, which is the initial kind of news release and drive, and followed by a very short-term pause. Now, most of the time, that's going to be a flag or a very, very slight pullback, but it's almost going to be that time catches up with price, if that makes sense. So you've got a 5-period moving average. That's a great way to time this kind of stuff. 5-period moving average catches up, and then it goes on to what I call phase 2. Now, obviously, the direction of this is going to be based on the news. The duration, how far this goes in terms of the order of magnitude, is going to be variable depending on the news as well. But you obviously want to see a significant reprice, so significantly moving, and for multiple minutes in a row. If you get 1 or 2 minutes then in flags, you've got to be a bit careful, because those are the kind of things that can reverse on and can catch you out. You want a multiple kind of minute move, and then a flag, and then the second phase, and this one's a little bit smaller than usual actually, if I'm honest. The second phase is a kind of a second leg up, followed by a longer and kind of slightly deeper pullback. I know this isn't very deep in this circumstance, but that there is what I call phase 2. We'll look at some examples in a moment. That genuinely is a 2, guys. We'll look at some other examples in a moment on the indices. But phase 2 is generally sometimes the kind of length of the move is more than the initial impulse. It's not that we're looking at. What we're looking at exclusively are the reactions. So the reaction on phase 1 is more of a flag, a consolidation, a pause. The reaction on phase 2 is more of a pullback. So the market will pull back. Admittedly, that's not too much in this example, but it pulls back. And then phase 3 is a further drive, and then a longer consolidation or pull or deeper pullback. And very often, guys, this is when you get the kind of unwinding quite a bit. And the 4th phase, that's up to debate. Very often you might then get a double top scenario. You might get a continuation. I'm not concerned with that in the moment. I'm concerned about these 3 phases. And yes, a lot of scribbles on that chart, isn't it? But first phase, impulse, flag. Second phase, drive, deeper pullback. Third phase, another drive and a deeper pullback still. So the pullbacks are getting deeper after each move. Tends to be what we see. Not always, but tends to be what we see. Now, if we look at the DAX, for example, let's look at the German 30 DAX. And we scroll. Let me make sure I'm not with a drawing pen. I'm going to scroll and see the same kind of thing. For clarity, this is the same type of market impulse, really. It's a scenario where we saw the market go to the upside. Now, you can see the same scenario happen. We have the good drive, and this is like a 3 to 4 minute pause. This is much kind of clearer, really, in terms of the explanations. You get that really tight high flag, very high tight, and the 5 period again, little tip, that guys works very nicely for kind of pushing up and giving that first impulse if you're a day trader, of course. And then the second drive is here, and this is a deeper, more what I'd expect from a pullback. So you get the first kind of pause, you get the second deeper pullback. There's number 2. Number 3 is this longer. This is a much more protracted pullback that took much kind of longer for it to work itself out in the wash. But that's the sort of thing before it ended up doing a kind of double top, actually, or a slightly lower high. It did end up winding, but that's very characteristic of these type of moves, guys. Very characteristic. Little pause, deeper pullback on 2, and 3 more of an unwinding. Now, textbook, I'd have probably said that this would maybe have done some work at highs, and if it wanted to reverse, would have after doing work at highs. But hey, you never get the textbook setups. The importance really is to think the first impulse is generally the quickest. The second is a little bit steeper, a little bit longer potentially. But again, most of the time for the genuine reprice, you're going to get the third shove. The third shove is generally a little bit longer, a little bit wider, and they don't always get a revisit to highs. So how does that translate to your trading? And by the way, guys, if you haven't checked out our channel sponsor, link in the description below. But how does this translate to your trading? Well, this basically means, okay, if you want to join the move, the obvious thing is after 3 pulses, be very, very careful. After your third impulse, then don't start chasing stuff, because this is very common and a lot of traders get caught out. And so, when you feel like you want to get in and you're buying here, you're late and you've missed all this. You need to just resign yourself to the fact that this is probably going to unwind a little bit. Get some deeper moving averages in, get a VWAP on if that's your thing, get a stochastic on, wait for a longer period, wait for some bottoming signal. Like this is a great example, and I didn't actually trade this specific example, so just for a kind of transparency, guys, but just looking at this is like a double bottom, a triple bottom. Support starts to hold. Okay, if you wanted to buy this after the third move, you wait for the longer unwinding, then you look for the triple bottom or double bottom or the little wick under, the type of thing that I like. If you're buying on phase 2, again, you can be using something very simple like a kind of miniature trend line break to the upside. And if it's phase 1, you've got to be very quick, you've got to be looking for that flag, and you've got to be prepared to kind of have a tight stop on it, but be aggressive. The other way that you can do this, not my favorite if I'm honest, is kind of take a break of that high there. So as you get the flag, you put the high in, you see the retracement, see the first red, then once you got the first red, you then put your high in, and then you buy a break of that high, you drag your stop up very quickly, because the last thing you want, don't forget, people are still digesting the news, still kind of getting a feel for it. The last thing you want is to push through and then just suddenly the floor pulls through. I've seen that more than once before. Anyways, there's 3 kind of phases of an impulse move. I hope that's helped. If it has, a comment and a thumbs up is much appreciated. And like I said, don't forget to check out our channel sponsor. Now, I'd love to see you there. Take care. Bye bye.